Thank you, Simon. Thank you. Good morning, everyone. It's great to be here. Simon, thanks for having me again. I'm going to talk this morning about how to go about using VectorVest to try and find the very, very best shares out there, shares that you can pretty much rely on, sit on, and only have to manage them with a few glances every week. Before I can start, I have to put up our VectorVest disclaimer. I think we're pretty much the only people here today that are fully authorized by the FCA. That means that although I am qualified to give financial advice, I'm not allowed to give financial advice in the absence of sitting down with everybody and doing a very long and detailed fact find, and the sort of thing that your financial advisor would have done with you over the years. So I'm allowed to say what I do myself, but I have to also add that although those shares may be suitable for me, they may not be suitable for you, and the regulators asked me to say that. So that done and over with, we can move to what we're going to try and cover this morning. First of all, the VectorVest system itself, how we go about finding the very, very best stocks, those stocks with the best combination of value, safety of earnings, and trend. There's a good time to be in the market, ladies and gentlemen, and there's a lousy time to be in the market. And a big part of the exercise is working out when it's a good time to be in the market. And that is looking quite good this morning. Then I'm going to show you how to go about finding the very, very best shares easily and automatically. And then at the end, I've got a couple of slides on the secret to success, okay? So I'm going to do my best to try and get through that in the next few minutes. I've never finished a presentation on time in my life, so I hope this is going to be the very first one. The VectorVest Edge, ladies and gentlemen, it's a simple edge. The program does all the heavy lifting for you, but we put together three aspects. First of all, the fundamental position of a share. We want to find a share with great fundamentals, a company that's making money, making lots of money, growing their earnings, growing their sales. The fundamental position of a share. With the technical position of a share. Now, the technical position of a share I call the study of trends and turning points. And we want to put that together with the technical position of the overall market. In other words, the trends of the overall market. And ladies and gentlemen, when all three are coming together, then I can predict the future with a certainty that's unusual in this line of work. Now, I started in the stock market. I put on my first trade in October 1982. I did my best to keep the fundamentals up to date. I was living in Johannesburg at the time. There was about 500 shares listed in the Johannesburg Stock Exchange. I did my best to try and keep the fundamentals up to date, but I failed miserably. One, my background, I have a PhD in mechanical engineering. So I'm not an accountant, so I found the annual reports and the interim reports quite foreign to me. Secondly, I didn't have the time. The annual reports kept piling up in the corner of the office. And thirdly, quite honestly, way back in 1982, I didn't have the inclination either. The only thing I was interested in at that time was, in fact, chasing a rugby ball. So, and that's why I went to South Africa in the first place, to play pretty much professional rugby. So, all these years later, I have only one regret. That is that if I was 30, 35 years younger, I would be a professional rugby player today, Simon, and not talking on your forum. Okay, so I tried to keep the fundamentals up to date, and I failed. Now VectorVest does all that for me. It actually puts together all of the annual reports, all of the interims, and scans them all for value and safety of earnings. I'll show you that in a second. I was good at the technicals, and certainly for most of my trading career from 1982, 83, right through till I got involved with VectorVest 6-7 years ago, I was purely a technical trader. And these days, when I put together the fundamentals and the technicals, my hit rate has definitely gone up, and I post all my trades on my blog at VectorVest.co.uk, and we've had a really good run over the last 7 or 8 months. Particularly impressed with a little share called Morgan Sindel that had some wonderful results yesterday. I spoke about it at the last webcast that I did for Simon, and VectorVest rated the share exceptionally well, and yesterday the trading statement proved that we in fact got that right, and the share well up on the day. I would expect it to be doing well this morning. So we put those three things together, and I do a video with at Core Finance, used to be Tip TV, with my dear friend Zach Meir. And Zach says that VectorVest is the best of both worlds. We put together the best of technical analysis with the best of fundamental analysis. So I always run out of time, so our offer is quite simple. I'm more than happy to allow you to test VectorVest UK and VectorVest USA for 5 weeks, and that's £5.95. If you like it, then it's £44 a month on a month-by-month basis. And here's my promise to you, is that if I can't make you money, you can stop it at any time. There's no contracts whatsoever. And we stand by that. No quibbles, no arguing, no long stories. If you want to stop it, you stop it. Okay. And there's the link. Simon will, I'm sure, will post it later on. VectorVest.co.uk/RTC. Okay. All right. The 3 pillars of VectorVest, folks. What's a share really worth? How safe is it? And some idea about the trend. The top 2 are fundamental measures of the company: value and safety. And this one is a technical measure to do with the trend of the company. So I have a few definitions to go through, and then I promise I'll go into the program. First of all, I believe that my definition of fundamental analysis is that it's a search for the true value of a share. And every evening, VectorVest looks at the balance sheet, cash flow statement, earnings statements, sales of all 2,200 companies that are listed in the London stock market, and all nearly 10,000 that are listed in the US stock markets. We buy that data from Thomson Reuters, and it puts a valuation to every share in those markets. So you can see at a glance whether your share is undervalued or overvalued. Now, our valuation methodology is loosely based on what Benjamin Graham wrote about in The Intelligent Investor, the guts of 100 years ago. We put a very conservative valuation on every company on the London stock market and on AIM, and you can see it by eyeball, or you can actually scan to find shares that are trading less than the VectorVest valuation. In my work, ladies and gentlemen, I like to see a buffer of 20%. That makes me very lucky. A nice buffer of 20%. So I look for shares that are trading 20% less than the VectorVest valuation. Now, a much more important measure of value is relative value. And in relative value, again, we look at the fundamentals and we project earnings for the next 3 years. We assume that those earnings will be fully discounted into the price at some time over the next 3 years, and we work out what that price will be. We take the projected price, subtract the price today to get the upside, and we divide that upside by what a AAA rated corporate bond will pay over a window of 3 years into the future. And the resultant is relative value. So it's an indicator of the long-term price appreciation potential, and for long-term, read 3 years. Now, within that 3 years, there's no timing whatsoever. It's just a window of 3 years into the future. If your share has a relative value above 1.3, that's saying that we believe that this share will outperform the risk-free rate by 30% over a window of 3 years into the future. Now, that, I believe, is the most important number on VectorVest, and it drives the share price. Exceptionally important. And if I was doing a presentation today on speculation in shares, then I would sort all my shares by relative value. But the point of today's presentation is worry-free. And as we'll see in a moment, we actually sort the shares by the safety of the earnings. So relative value, a very, very important number. The second proprietary indicator is relative safety, and as the slide says, this looks at the safety and the consistency and the predictability of the financial performance. So again, the algorithm looks through the financial data over the last 5 to 8 years. It looks at the balance sheet, the income statement, the cash flow statement, sales, margins, and it makes a judgment as to whether these numbers are getting better or these numbers are getting worse. It also looks at dividends, it looks at the dividend growth, it looks at the dividend safety. It puts together a very comprehensive model of 17 inputs, which in fact quantify the safety of the share. And as we'll see, the point of this presentation today is worry-free investing, where you can actually put 80% of your cash, that's what I do, into worry-free investments, and I speculate with the other 20. It means that I only have to look at them at the weekend. So a very, very important number, especially for today's presentation. The third number is relative timing, which measures the trend. It measures the direction and the magnitude and the dynamics of the price history on a scale between 0 and 2. Above 1, the share is rising. Below 1, the share is falling. And then what Bart DeLido, the founder of VectorVest, did is that he put all three things together into the master indicator VST. This combines relative value and relative safety, which are fundamental measures of the company, with relative timing, which is a technical measure of the company, into the one single number. And as a default, all of the shares on VectorVest are in fact sorted by VST. That's the default sort. We calculate the stop loss for every share in the market every single day. Now the stop loss is a 13-week, 65-day moving average of the closing price, but it's adjusted. It's adjusted for two things. It's adjusted for the volatility of the share by a methodology called average true range, which the technicians listening will be familiar with. And also, it's adjusted for the fundamentals. If the fundamentals are really good, we give the share more wiggle room. So the stop loss is doing its best to weave a fine line between giving the share enough room to move so that you don't get stopped out and stopped out and stopped out and die in a sea of stop losses, and also protecting your capital. A very fine line to tread. Those of you that have been in this game for a while will know that stop losses could drive you to drink at times, but they are necessary. I'm going out to Oxford after this meeting to our Oxford user group, and we have a young man out in Oxford, exceptionally experienced investor, who bought Marconi at £13, and it just fell the whole way to 1 pence, I think. So stop losses are there for a reason. They can be difficult, but they're there for a reason. We put a buy, sell, or a hold to every share every single day. Now, the buy, sell, and hold are largely trend-following tools. I think the only fundamental input in the buy is the VST must be greater than 1. So look upon these as trend-following tools. They can be used, certainly a hold turning to a buy we can scan for, and that's a really good buying signal. The sell is obvious. You want to run for cover, or certainly be watching very closely. But one of the main aspects of the buy, hold, and sell is to calculate the breadth of the market. And every day, VectorVest calculates the number of shares on a buy divided by the number of shares on the sell to calculate the breadth of the overall advance. And that's a very important part of our market timing model, which I'll get to in probably about 5 minutes. You'll be glad to hear that that's the definitions all over. So now I can actually spend a few minutes in the program itself. So let me get there. There we go. This is the front page of VectorVest, and the front page of VectorVest, I know if you see it for the first time, can be a little bit intimidating, and I've actually taken quite a bit off it. So it's done like that so that you can actually have a one look and get all the information that you need. But I'm more than happy to admit the first time you see it, it can be a little daunting. Quite simply, the traffic light measures the short-term trend of the market, and I'll talk about that in market timing in a moment. But this morning, the short-term trend is looking very strong, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time, and the trend has just turned from down to up over the last day or two. So I now want to go to viewers, and if I click on viewers, I've got all of the stocks on the London stock market and on AIM, and they're sorted by VST, value, safety and trend. I've loaded the top 50 of 2,163 shares that we're following on the London stock market and on AIM. And I've just loaded the top 50 because I just stress about the internet. Sometimes if I load all of them, and it does all these calculations every time I click on a new heading, for example, it can actually cause the sound quality on the internet to deteriorate. So that's why I've only loaded the top 50. So at the top, we have Games Workshop. Now, I don't have a position in this personally. It's traded, there's the code, it's trading on the London Stock Exchange, that's the L, and as you can see, Countryside Properties, which I do have a position, is on AIM. CAS, in which I do have a position, is in fact on the London stock market, and there's a little X beside it, and that means there's options written on the share. So I'm going to start with CAS, because I know CAS, and CAS is doing very well for me at the moment, although but worried about the copper price this morning. CAS is trading at 6.45. VectorVest believes it's worth £10. It was up 10 pence yesterday. Now, the valuation is a proprietary number, folks, and the algorithm looks at the past and projects and calculates a value for every share in the market every single day. Now, that on its own is a tremendous edge in the markets. And my dear grandfather told me so many years ago now that the only way to make money in anything was to find the value of something and pay less for it. So that's what we're doing with CAS. VectorVest believes it's worth 10, and it's trading at 6.45. That's a good tick to start with. Up 10 pence yesterday. Clearly that's not proprietary. You can get that from the Evening Standard for free. Up 1.5% to 1.65% yesterday. Clearly not a proprietary number, but the next number is a proprietary number. At 1.64, this says that we believe that CAS will outperform the risk-free rate by 64% over a window of 3 years into the future. Now, anything above 1.3 is excellent, and I have my own rating above 1.5. I call it bloody marvelous. So that's a really, really good number. So first of all, I've got a share that's undervalued, that's got an enormous earnings potential. The next number is not so good, relative safety. And at 1, this is saying that over the last 5 to 8 years, there has been ups and downs in the books. And that's hardly surprising, ladies and gentlemen, because the copper market 18 months ago came out of the biggest bear market in recorded history. So that's shows that relative safety is average to low. It's not a share that one would want to have in a worry-free portfolio. And my position in CAS, in fact, is a spread bet, and I've been in it for the last, I don't know how long now, 3 weeks or so, and I've reported that, and my other position in Rio Tinto, which is also a spread bet, on the blog. So I look upon those as trading shares, and I've been very successful in those. So relative trend is 1.7. And when we put all three things together, and it's for those of you who are quantitatively orientated, it's pretty much just the sum of the squares. At 1.48, that's the second biggest VST on the London stock market. It's on a buy recommendation, remember. For a buy recommendation, it has to be moving upwards, and the VST must be greater than 1, and that puts it on a buy recommendation. The stop loss is 536, and these numbers are our best shot, ladies and gentlemen, at the future. We believe it's going to grow earnings next year at 42%. Earnings per share. It doesn't pay a dividend. and clearly a share that doesn't pay a dividend will always be marked a little lower on our relative safety. The algorithm feels very strongly that a company that pays a dividend, even a tiny dividend, that's got a history of growing and maintaining that dividend, is a much safer financial proposition. Okay, so and I can do lots of things now. I could right-click here. I could view stock news. That would take me into the FT or Reuters. I could pull up a stock analysis report. Let's just do that. Hopefully it won't stuff the internet up. For every share in the market, VectorVest provides a full summary, and these are just sort of animated graphs. I'll put up the charts in a second. And all of the VectorVest metrics are explained and gone through in some detail. So green is good. Okay, so we can see that buy is green, valuation's green, growth potential, RV is green, safety is fair, RT is green, and the overall rating is green, and the stops and the comfort index, which I haven't defined, all of these things are great. Sales growth, CAS has got a sales growth of 43% this year. This is excellent. Okay, so all of those metrics are defined for you, and I have stockbrokers who cut and paste this and send it to their clients. I don't know what we should do about that, but they do. So exceptionally good share, and I'm going to put up my chart, and there's the chart, and this is my normal format, guys, and I normally don't have moving averages on here. This is my normal format. I like to look at valuation. And as you can see, the share trading a mile below the VectorVest valuation. I like to see 20% in there, all right? But here I've got earnings per share growing, and over the last year, earnings per share has gone from 10 pence to over 50 pence. And that's quite something. And as a result, we got this run in the share, and then we got this move like so. Now, those of you that are technically orientated, this is what technicians call a cup and a handle, but you don't have to worry about that. The first VectorVest buy signal, as you can see up here, buy was about there, and it went to hold. Hold means hold, and then the last buy signal, which was where I got in, was just about here on my last little spread bet as it broke up through that high, somewhere around here, and there was lots and lots of really good signals there. And if you are a technician, for example, I'll take the value off now, and I'll take the earnings per share off now, but there's a buy recommendation, and those of you that are technicians should see that when you get a multiple inside bar like this, and then we got an outside bar, you see the outside bar, which is also a hammer at 540, that was a cert. Okay, the fundamentals are excellent. And it's on a VectorVest buy recommendation, and we get a candle pattern signal up the page. Very rarely is that going to let you down, even if you want to be a speculator. Okay, so I've done quite well out of that recently. I need to be careful. Stop loss is well above entry, and I've locked in some profits already. I'm quite good these days at letting my positions run. When I started in the 80s, my problem was that I was snapping at winners, and I'd spent about 25 years getting that right, but I now let them run. Sometimes I give back, but I'm more than happy letting them run. That's where the big winners are. So I have a position in countryside properties as well. Let me put that one up. As you can see, it's undervalued, and I'll go away. It's undervalued. RV 1.59, RS 1.16. That's good, not excellent, but good. RT 1.58. It's on a buy recommendation, and was up 8 pence yesterday. So if I put this up, and this is my normal format as well. Let me get our valuation up there. I took that off a second ago, and just need to make it a bit heavier so you can see it. And earnings per share, ladies and gentlemen, earnings per share is the engine that drives the share price. And I like to see earnings per share rising like so over the last year. As you see, earnings per share is up from 20p to 30p. That's up a third. Undervalued, and it has broken out first of all, the first VectorVest buy signal was here at £2.50. It was undervalued. As you can see, it gapped up there, and that was a trading statement. There's normally a catalyst. There was a trading statement there, gapped up, and has just kept on going. That was the first VectorVest buy signal just here. I'm going to keep that graph up for a second, but and that's pretty much all you need to make good money. Now, I in fact didn't buy it here because I don't know if this has ever happened to any of you, but I didn't buy it there because I didn't have any money, because I was fully invested elsewhere, and I only actually bought into it as it broke up out of this little flag. Those of you that are technicians will see the flag, and I talked about that on Core Finance on TIP TV, and I'm looking forward to a nice ride now in Countryside Properties up the page. So that's the basics of VectorVest, and all of the stuff that I talked about. I've been looking at charts for a long time. I don't do probably as much scanning as some people do, and some people laugh at me, but I say that I just like being in charts, looking at charts. So I think that we're probably going to see this repeated on the upside. That will take us up to about 450 on this, and this little run up in the stock market that we're having at the minute. Okay, so I'm quite positive about that. That's been very successful. Other positions that I've got, I have a position in Caledonian Investments. Took a nice dividend off it. As you can see, I think that Caledonian Investments has got the highest RV on VectorVest at 1.85, RS at 1.41. This company has increased its dividend every year for the last 47 years, and please forgive me if I've got that wrong by a year or two, but something of that order. It's trading at 28. We believe it's worth 51. Okay, Coates I have a position in, 76. We believe it's worth 108. Again, RV 1.58, RS 1.27. These are great numbers and pushing up the page quite strongly. And I'll show you exactly where I got in. Not rocket science. All you got to do is follow the darn system. The first buy signal was here, just there. And then there was another one just here, and that's where I'm in from there, 60. I'm at 76 now. Okay, I'm moving up the page again. There was a trading statement here, and I'm looking forward to a nice move in this as the general market starts to move up the page. They had a pension debacle, which they've just put right, and that I think is the last thing in its way to move up the page. Okay, so that's very simply what VectorVest does. Now let's move on and have a look at the general market, because there is a good time to be in the market, folks, and there's a lousy time to be in the market. And VectorVest believes that you should be aggressive in the market when it's a good time to be in the market, and that you should be very careful in the market when it's not a good time to be in the market. And on the last little pullback that we had, which only lasted 2 weeks, we really didn't know whether that was a benign little pullback or whether it was another Lehman's moment. You just don't know for sure, especially with missiles being fired all over the world and all sorts of innuendos between the US and Russia going on.
David?
So, yes, Simon.
Sorry, just to interrupt you. Gordon has a quick question on the chart that you had just a second ago on the screen. He's just asking, do you add these trend lines in yourself, or does the system automatically generate the trend lines?
The system has got a support and resistance tool on it, which generates those horizontal trend lines that I had in. The actual trend lines that I put in around the flag, which are not horizontal, those you've got to try and put in for yourself.
Okay, fantastic.
So the system generates horizontal support and resistance levels, but not inclined trend lines. Those come from a little bit of experience. And you can tell Gordon from me that the first 10 years is the worst. After that's a piece of cake.
Only 10 years and then you can be
yeah, no, you'll be, yeah.
There we are. Thank you, David. Thanks very much.
So I hope I answered that well enough, Gordon, but I love the patterns, and I don't think you need the patterns to make a success with VectorVest at all. But if you can see some very, very simple patterns in the market, just a few triangles and flags and some continuation patterns like my cup and handle, my word, you've got something that very, very few people can replicate if you put a little bit of effort into getting those patterns and seeing them. Some people can't. After many, many years of trying, they can't. So the secret to making consistent profits in the share market and the mantra is we want to buy rising shares in rising markets and clearly sell falling shares in falling markets if you've got the stomach to sell something that you haven't got. So we've been timing the market for a very long time, and we have several objective systems that quantify market trends. Long-term systems for investors, which is what I'll be talking about today, and a short-term system for traders, which is what I talked about in the presentation before this. All of the systems, as I say, are totally rule-based, and no subjective input is required. So we look at three things, folks, to quantify the technical position of the overall market. Remember, my definition of technical analysis is it's the study of trends and turning points. And we look at the price of the VectorVest Composite. Now, what is the VectorVest Composite, you may ask? VectorVest Composite is a composite index of all of the shares that we follow on the London stock market and on AIM, equally weighted. And Dr. Toledo firmly believes that an equally weighted index reflects the sentiment of the market much, much better than a market cap weighted index such as the FTSE 100. We're not alone in that. So for every market that VectorVest follows around the world, the markets that Simon quoted at the outset, we have a composite indicator for those markets, which is comprised of all of the shares that we follow in those markets equally weighted. So we look at the price of the VectorVest Composite UK. We look at the breadth of the VectorVest Composite. Now, the breadth of the market is a function of our proprietary buy-sell ratio, the number of shares on a buy recommendation divided by the number of shares on a sell recommendation. And the third thing we look at is the momentum or the relative timing of the VectorVest Composite. And we put those three things together into these systems. Short-term systems, called the primary wave, are based around a short-term rate of change of price, momentum, and breadth. And the longer-term systems, or called the underlying trend, are based around a long period rate of change of price, momentum, and breadth. Today, because we're looking at a worry-free trading system, I'm looking at we're looking at the longer-term systems, and I should have switched darn Skype off. Please excuse me. So now, to minimize chart watching, and this changed last night. So and again, I haven't updated this morning, but the trends changed overnight. I did this yesterday afternoon, and I just have to change this quickly. I should have changed this first thing. Simon, please excuse me. To minimize chart watching for those on the move, the trends are coded. Now, as I write, the London stock market is in an up situation. Now, the first word refers to the short-term trend, and the second word refers to the underlying trend or the longer-term trend, and that changed last night, and that's why I didn't have it updated. So this means that the primary wave is up and the underlying trend is up. So if you don't like looking at charts, Gordon, and you don't know what you're missing, sir, but if you don't like looking at charts, then all you've got to do is to look at the front page of VectorVest, and you can tell the trend situation immediately. That's reported on the front page of VectorVest every day. And the underlying trend is used by position traders. And that's what we're going to be talking about today. So we have an up situation, and that's the front page of VectorVest. And I did update this morning. We have 371 shares on a buy recommendation and 313 on a sell recommendation, and thus the buy-sell ratio is positive. The little colored yard is in the green, and that's saying that the short-term trend is up. And we have just, underlying trend has just changed to up. As you can see, for the last 2 weeks, it's been down, and now it's just changed up last night, and that's why I didn't have that, I forgot to update those 2 slides. Okay, so overnight, the trend has changed up, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. If you are a position trader, really all you've got to do is to follow this. When we're in a confirmed down, you either want to go to cash, 2, you want to watch your stop losses very carefully, and 3, if you're capable of it and you understand selling something you haven't got, then you can look for short positions in the market. So let's look at the chart of the VectorVest Composite. And there's our chart.
David, I'm just going to jump in quickly. Richard, just on that particular topic, that we've seen the UK market switch to a confirmed up today. Richard just commented that the last 2 weeks the FTSE has been bearish based on the 30-minute moving average. Would you then wait until the close of today before changing a bias towards the long side in your portfolio, or really, I guess the system has already waited for that confirmation? Is there any reason to wait until?
I think that that you certainly could have a line in your trading plan that after a confirmed up, that you want the market to be moving up today. Certainly, yes. You could certainly have that line in your trading plan. I've been using VectorVest now for 6 years, and I trust it implicitly. So when we get a confirmed up, that's good enough for me. Okay, and the signals tend. There was the last confirmed up in December the 12th. And as you can see, this ran right through until a few days ago, and that was the 4th of July. And the market then came back to support, as defined by this little trend line, as defined by that old top, and now it's moving up the page again. Those of you that are versed in divergent analysis will see a textbook reverse divergence here, but that's beyond the scope of this little talk. So I think that question, Simon, is a trading plan question as to how you would handle that in your own trading plan. I don't think there's any cut and fast answer to that. I trust the system. The confirmed call is the most conservative of all the VectorVest signals, and the short-term signals have all been firing over the last couple of days. So I have no problems adding to positions this morning.
That's right. So once you get that 2-week confirmed call, it has already been through a series of tests and checkpoints.
That's correct. I think that you could certainly look for a good level if you've got the patience to watch charts intraday.
Right. Okay.
That was the last sell signal here. That happened in the first week of November, and the market sold off to the 12th of December, and we're running up the page. And as you can see, these signals tend to follow through for quite a long time. If I put up the this is since the start of 2016. A sell signal in the first trading day of 2016, and then a buy signal in the middle of February, and that lasted to November. And then run up to there, the 4th of July, and then we're going back up the page again. I particularly like this reverse divergence, and I think we're going to see, my stomach tells me we're going to see what technicians call a blow-off to the upside here. Time will tell. Time will tell. So I'm fully invested. I got stopped out of JD Sports a few weeks ago. I'd been adding to the position for 3 or 4 years, and it was very, very overweight in my portfolio. I had far too much money in my little portfolio in JD Sports because I added to the darn thing, and I needed to rebalance. So when it came back and hit the VectorVest stop loss on that after that trading statement, I got out of that. So I have got some money to add into the market presently, and I'm busy doing that this morning. So worry-free investing. Well, it's a conservative method of making money in any stock market. And it's focused around relative safety. Now, relative safety is an exact number, ladies and gentlemen, because we look at the past and we make a judgment on the earnings consistency based on the cold, hard numbers from the annual reports and the interim reports. Relative value, I think, is an incredibly important number, but in relative value and in valuation, we project the future. And as Mark Twain said, the future is a very slippery commodity. So relative safety is an exact number. It's made up of earnings consistency, year over year, interim over interim. The company size gets in there, a little bit of volatility gets in there, dividend history gets in there, and all the financial ratios, of which the only one that I pretty much look at is debt to equity ratio, one of the important ones. So relative safety, rather than sorting shares by VST, in worry-free, we sort shares by relative safety. I'll show you that now. Here's the methodology. It couldn't be simpler. When we get a confirmed up, which we got this morning, we buy 15 of the highest RS stocks on the market, spreading ourselves across the market, hopefully not putting any more than buying any more than 2 stocks in any one area of the economy. Now, when the market is rising, as it did for most of this year, there is a very low probability that you'll get stopped out of any of the high RS stocks. But it could happen. It could happen. Company could drop the ball. If you get stopped out and the market is still in a confirmed up, then we resort and we buy a share and replace the share that we got stopped out of by another share that we're not holding. So in a confirmed up, ladies and gentlemen, we're always fully invested. Now, markets breathe in and they breathe out. Over the since the 4th of July, they breathed out very quickly. The last pullback in last November lasted a month. Sooner or later, we're going to get a confirmed down. We got one on the 4th of July. Now, if the market is falling, there's a much higher probability that you're going to get stopped out of your high RS stocks. On this occasion, ladies and gentlemen, if you do get stopped out, you do not replace and you build a cash position. So if we had a pullback which was much more severe than the one we've had over the last 2 weeks, if we have a pullback, then and you get stopped out of, let's say, 3 shares out of your 15, you would now have a cash position equal to those 3 shares, and you're now holding 12 shares. When in this pullback over the last 2 weeks, we weren't stopped out of any at all. It wasn't long enough, and the RS shares are very resilient. When we get a new confirmed up, we replace the 3 shares that we've been stopped out of. So that's as simple as that. Now, I've tested this, and it's one of the only systems that I've tested that is mechanical, that works, and I've tested an awful lot of systems. Normally they shake themselves to pieces. The objectives are capital appreciation and dividends. That's obvious. Now, certainly in North America, if you were to apply this in North America, you can make an extra source of income by selling options. Now, that is more difficult in the UK. It still can be done. There are a few brokers that will allow you to sell options, but many people who are in the options market after many months and years have concluded that if you want to be in options, you need to be in the US. So that and VectorVest, certainly in the US, a big part of the worry-free investing strategy is to make extra income from selling options, selling covered calls. It's the most conservative of all of the options trading strategies, and in the US, grannies are writing covered calls. So I better not say too much about grannies, because Simon, I'm currently dating one. And I'll get a coat around the ear. That's what's happened when I tested this over the last 20 years. From the 17th of May 1996 to the 17th of June 2016, 20 years. In that 20 years we had many market types. We had the run-up to 2000, the sell-off to 2003, the sort of commodity super cycle to 2007, the global financial crisis, and this bull market that we've been enjoying since March the 9th, 2009. In that time, there was 177 trades placed. That's all. And 167 had been closed out, and there were 10 currently open. Now, we'd collected 544 dividend checks. And that was $51,823 out of a $100,000 portfolio on dividends. Now, I didn't add the dividends into the results, so just assume that you spent the dividends on London Pride, because that would have been too difficult. This is what happened over the 20 years. The 100,000 turned to 683,000, and this can be replicated easily using the back tester. And since last August, this is pushed on the upside. So that's an 18% compounded return, and the dividends were not reinvested. Now, when I take this into the city, people don't believe it. Folks, it wasn't easy, because from 2000 to 2003, it went sideways and did nothing. Okay, that's the global financial crisis, that's the euro crisis, and it's pushed up a little bit now. So a very conservative method of building cash with very little effort. Now, in the UK, I tested from March 2009, the bull market, I admit, but £50,000 has turned into £245,000. That's over 20% compounded return, and as I say, this is Brexit, and it pushed up again. So now, where I want to go to now is I want to go into the program and show you this. So if I go into the program and I go to Unisearch, we have a worry-free UK search. Couldn't be simpler. Stock's price is greater than 0. The stock's on a buy recommendation. I'm not looking at AIM stocks, I'm just looking at London Stock Exchange, that L, and I want the relative safety to be above 1.2. And I'm sorting, rather than VST, I'm sorting the shares by RS. It's going to find all the shares that fulfill that criteria, and it's bringing the ones with the top RS to the top of the pile. And I'm loading 50 stocks. So I run that search. That's what I get. And this was done at the last confirmed up in on the 16th of December last year. Remember, if I go to timing for a second, and I pull up the market timing graph. That's just here. Okay, that was the 15th. The green triangle for the confirmed up happened on the 15th of December, and clearly the next morning would be the 16th. That's why I'm doing it on the 16th. All right. So if I run that search, that's what I get, and I want to quick test the top 15. And that was the result, folks. The general market is up 10.72%, and the worry-free shares are up 22%, which is 39% annualized. Now, I think that when the general market is doing exceptionally well, roaring up the page, there's a good chance that these worry-free shares will not outperform the market. But if the market is flattish, and the market, although it's been rising this year, it hasn't been rising convincingly. These worry-free shares have outperformed the market significantly. And that we can now run it today. Go back to today's date, and there's the little run my search. A lot of builders, I know, but those are the shares that come out of this. Unfortunately, I can't test going forward, but those are the worry-free shares that come out of this. A lot of builders there, clearly you would only want to have a couple of those. Okay. And MJ Gleason, I wrote about in the blog a couple of days ago. Looks very good to me. So this is our methodology. It's been tested over many, many years here in the UK, in the US, in Australia, and in Canada, and it's robust. It's even working in South Africa. Now, the South African market's had a torrid time. The politics down there are awful, and it's had a torrid time since April 2015. It's been in a tight range, very, very difficult indeed, and the South African market is well down, and the worry-free portfolio is outperformed it by many, many, many times. So I think that this can be a very, very good place for some of your long-term holdings. And remember, in all of this, I haven't added in the dividends. If you were to add in the dividends, then performance would be significantly better. When I take this into the city, they don't believe it. They simply don't believe it. So that's my presentation this morning, folks. And the last little bit is the secret. Okay. Now, I was in business with my best friend Tom Hogarth for a very, very long time, and we ran a website called Which Way Today, which gave live signals for the Forex market and the stock indices market. And Tom was the chief market strategist at City Index for many years, and he had access to an awful lot of data. And we concluded the following. The secret. A loser, the 95% that lose money, they invariably become pessimistic when they have a winner. They become pessimistic as they feel the market's going to snatch away their profits, and they end up taking a small profit. Unfortunately, a loser invariably becomes optimistic when she has a loser. They're sure that it's going to turn, and they allow the small loss to become a big loss. So the next time you have an open position and it's going your way, just become aware of your thoughts. Have you become optimistic, or have you become pessimistic? The next time you have a losing trade, become aware of your thoughts. If you're a part of the 95% that lose, there's a good chance that when you have a winner, you become pessimistic, and that when you have a loser, you become optimistic. Give it another tick. To put you into the 5%, it takes a very simple switch. And that's got nothing to do with technical analysis or fundamental analysis. The winner invariably becomes optimistic when in a winning trade and pessimistic when in a losing trade. And this allows you to let your winners run and close losers quickly. A simple mind shift is all it takes to print money. The first step is to become aware of your thoughts and practice changing them. So my challenge to you is that over the next few days, as you put positions on, and they either move up or down on you, to just be aware of your thoughts. We're 100% sure 95% of people who lose in this business, they get their thoughts the wrong way around. They become pessimistic when they've got a winner, and they become optimistic when they've got a loser. As I say, I'm more than happy to allow you to test VectorVest UK and VectorVest USA for 5 weeks. It's £5.95. If you like it, then it's £44 a month on a month-by-month basis. And if you don't like it, you can stop at any time, after 1 month or after 3 months, or you can stop after the 5-week trial. And that's the link. And this on the program, I have a 5-week course, which will show you, first of all, how to use VectorVest, and secondly, how to actually make some money in the market. I would say half of it is about VectorVest, the other half is about general market trading principles. Okay, how to analyze any stock in 30 seconds, both technically and fundamentally. This is all about getting rid of losers and exits. This is all about market timing. This is all about finding the very, very best stocks that suit you. That could be the worry-free methodology if you want to be conservative, or it could be a more aggressive search if you want to be a trader. This is the more aggressive search is what I talked about the last time I was here. And then how to put together a trading plan. There are many, many areas that are not cut and dry. Where do you take your profits, for example? Do you run a trailing stop loss up behind you? Do you get out after you've made 3 times what you've risked? All sorts of exits which have to be quantified in a trading plan ahead of the time. Remember, ladies and gentlemen, we haven't got a clue what the market's going to do next, but we can plan and think through what we're going to do if the market should do something. Okay, and there's not that many things it can do. Simon, any questions there, sir?
Yes, thank you, David. Just in the last minute, I think you've already addressed Peter's question. He was asking, could you ask David how VectorVest can help traders rather than buying the shares? So you actually touched on that just in that last session, looking for the aggressive searches.
Well, it was certainly, we've got aggressive searches, but I found, Peter, that if you put the fundamentals together with the technicals, and you're trading long in shares with outstanding fundamentals when the market is rising, and you're trading short in shares with lousy fundamentals when the market is falling, then you line up the probabilities enormously. I don't know if you were in the room when I talked about CAS. I have a position running in CAS, which is a trade, and if I pull up the chart, there's CAS, undervalued, growing earnings, and it broke out here, went to a VectorVest buy signal, and then if I blow up the data, I can see that it was on the VectorVest buy signal from there, and that was at 525 I bought into it. It's now at 645, and that's a leverage spread bet. So by putting together all of the fundamentals and the technicals and the general market, then you can push your probabilities up enormously, even if you're holding shares for a few days.
That's great. Do you ever add to a winner, as some professionals do in Forex? Bill's asking.
Well, I add to winners all the time. Yes, that's and it's taken me a long time to get that right. Like the first few years in the 80s when I started this, I found myself snapping at winners, and then I had to sit back and allow winners to run, and then once I got that, then adding to winners, and that's what I tried to allude to in JD Sports. I'd added to JD Sports maybe half a dozen times over the last 3 years, and that meant that a big percentage of my portfolio, about 30% of the portfolio, was in the one share, and I had to rebalance that, and when the share actually started to pull back recently, I got out of it all. And so yeah, I do add to winning positions, and in the stock market, most certainly adding to winning positions. I've added to that Countryside Properties, and I've added to Morgan Sindall recently. Yeah, adding to positions is the best way to get rich quick, that's for sure. Takes a little bit of practice, because if you add to a position, if you go to bed and you were up in a position and you added to it, and the next morning you get up and the thing goes against you, your mind keeps telling you that, well, if you'd taken the money yesterday, at least you would have some money. So it can be quite difficult to get right adding to winning positions, especially on the short-term stuff. But yes, when I'm at my best, add to winners. Yeah.
You had a fantastic quotation on one of your earlier presentations, David, that you finished up with, which talked about this psychological block that traders have, whereby they refuse to sometimes add to the winners, but go chasing. They let the losses run.
Yes, sure. It's so easy to do that. I tried to allude to that in the last. We become optimistic.
Yes.
When we've got a loser, we become optimistic, and when we've got a winner, we become pessimistic. And to actually make money and to print money, you've got to switch that around in your mind. When you've got a winner, you must become incredibly optimistic, and when you've got a loser, you must become incredibly pessimistic.
That's right.
And that takes a little bit of doing. That takes a little bit of doing, okay? If you observe your thoughts, I think that there's a really good book out there called Zen in the Markets by a very dear friend of mine called Eddie Topple. God bless him, he died a little while back. And I think if you hunt around the internet, you'll get a copy of it, Zen in the Markets by Eddie Topple. He was a floor trader on the Chicago Merc, and it was called Fast Eddie on the floor because he never hesitated, and he used some Zen techniques to get it. He just bought a simple breakout, and then he would add to that breakout, and he printed money when he was at his best, like so. So I certainly add to positions when I'm at my best. I'm not always at my best, but when I at my best, I add to positions.
Okay, David, we'll need to draw to a close there, if I may, but thank you very much indeed. We've got the links are in the chat box there, that VectorVest.co.uk/RTC for those that want to get on the trial for the 5 weeks and access all the university and webinars and associated gifts that go along with that. So thank you, David, for joining us again. It's been great to have you on. We will keep in touch, and good luck with the portfolios until the next time we have you on.
Thank you, Sam, and thanks very much. Good morning, everyone. Have a great day.